Hey, Dale.
Yeah.
Can you talk to me about audits?
Oh, I love to talk about audits, especially when they're the net worth audit. So what people need to know is that the CRA is getting more and more aggressive with their auditing. And they use a special strategy called the net worth audit in order to trap people and make them pay as much tax as possible. Now, the way the net worth audit works is the CRA looks at a period of time in a taxpayer's life. They look at the beginning of the time and see how much money and how many assets the taxpayer had, and then they look at the end of that period and see how many assets they had. And then what they do is they look at the difference and they see how much value has gone up in terms of one's assets. So if you started off with 100 grand worth of assets and ended the period with $400,000 of assets, your assets have gone up by $300,000 during the period. Plus they look at how much your living expenses are. So if it costs you $80,000 a year to live during those 3 years, that's another $240,000 that you must have earned and spent. So that 240 plus the 300, they figure that you must have earned $540,000 during that period. Now the problem is that during this period, you may have gotten money from all kinds of other reasons other than income. You may have received an inheritance. You may have borrowed money from the bank. You may have sold an asset. And the CRA never ever looks very carefully at inter-account transfers. They never look very carefully at all kinds of other things that can affect the outcome of the net worth audit. So what happens at the end of the day is they end up assessing you and they think you make much, how many muches was that?
Like 6?
Okay, much more money than you actually earned during that period. And they charge you a tremendous amount of tax. And of course, they always add penalties because the auditors love to assess the gross negligence penalty, which is 50% of your undeclared, tax. So the way it works is you can have that $540,000 that they think you earned. If you only actually declare $200,000 during those 3 years, there's a difference of $340. So they'll say you made $340,000 more than you actually did. They're going to give you a tax bill of about $170,000, another $85,000 of penalties. We're up to $255,000. Plus, they're going to add interest onto that. So I don't know, what's that? $270,000, $280,000, like something like
Lost
that.
me.
We're up to close to $300,000, and usually they're wrong. In fact, what happens is there's a whole manual. There's an entire manual for the auditors, and I've read the manual. And
I have not read the manual.
She has not read the manual. I've read the manual. And the manual says that they're not supposed to use the net worth methodology unless it's a life or death type situation, unless it's the only way that you can go and reassess someone. For example, a drug dealer, cocaine dealer. Cocaine dealers.
It's a good example.
Yeah, thank you. Cocaine dealers do not get receipts from the Colombian drug lords. So how do we know if their expenses are correct? And yes, cocaine dealers, like everybody else, like lawyers, like marketing people, they have to pay taxes on their income. CRA doesn't care what you do, they just want taxes on your income. So when there's a cocaine dealer or where there's somebody with absolutely no paperwork at all, you have to use the net worth methodology to figure out if they've actually declared the correct amount of money. So if a cocaine dealer has declared $10,000 of income per year over 3 years, and that's only $30,000, but during those 3 years they bought a Bentley, and they bought a Rolex, and they bought some fur coats.
And a Maserati.
And a Maserati.
Maserati.
A really good Maserati. And they bought that Maserati, you can be sure that they made more than that $30,000 over those 3 years. So the net worth methodology is a great tool in those cases. But for normal people, for normal cases, there's absolutely no reason why the CRA should be employing the net worth methodology in an audit. If you have had a net worth audit and you have got a big reassessment or a big proposal letter that attempts to assess you or that intends to assess you for a tremendous amount of money, remember, give me a call.
You took my part. I was going to say, what do I do if that happened to me?
Oh, thank you for asking. I'm glad you asked. If that happens to you, give us a call. At Barrett Tax Law, we are experts in audits. We are experts in audit representation. We are experts especially in challenging net worth audits. And we've had tremendous results. In fact, I don't guarantee things. Nothing's guaranteed except taxes and death. But in the case of a net worth assessment and a net worth audit, I can almost guarantee that we can make a massive amount of difference. And you'll be glad you called us. So give us a shout at...
I don't know.
She doesn't even know our number. Give us a call
not
at...
the 1-800 number.
Give us a call at 1-866-278-8424 or visit us on the web at www.barretttaxlaw.com. That's BARRETTTAXLAW.com.
3 T's.
And if you want more information, look at any one of my books that I've written. A lot of my different books have discussions on the net worth methodology and on audits and on challenging the audits. And there's a new book that's out right now. It just came out today called Pay Way Less Tax. It's available on Amazon. And you'll be glad you did. So give us a shout, and I look forward to having a chat with you.
I'm for sure going to read that sometime this year. For sure.
She never reads any of my books.
I don't. I checked that I'm in the dedication, though.
There you go. Thank you. Have a great day.